Alright, I wanted to take a few minutes to discuss how I trade, so you can get a picture of what I do in the morning and how I pick my stocks, how I trade, everything. I wake up in the morning and first thing I do is I go check out the markets. I have my highest probability patterns going on from Elliott Wave, but that's not what I really worry about in day trading. I'm looking, and this right here, this candle right here is today. I'm looking, where is it opening? Is it going up? Is it going down? This will give me a picture of how I'm going to trade for the day. You can see yesterday it gapped down to here, opened here, but since it was such an excessive gap down, a lot of people thought it was a good time to buy, so it was a positive day. So there's a lot of different ways you can tell with a decent amount of probability what the markets will do for that day. For instance, today we opened up here, so we closed here yesterday. We gapped up today, and under normal market conditions, this would have been a massive gap. But the last 6 months have been so absolutely insane that this is normal, and it shouldn't be. But we'll get back to normal in a few months. Anyway, so we gapped up. So my first thought is, well, here's our previous all-time high. Our all-time high from the last 100 years. We're gapping up towards it. This is kind of a resistance area because this was a novice gap. A lot of buyers trying to jump on the bandwagon, thinking, oh my god, it's an all-time high, it'll go up forever. So I don't so much count the novice gaps, the novice parabolic moves in my support and resistance areas. So right here generally is a resistance area. Well, we're coming close to it. So we gapped down, we started to come up. We've got the high of 2 days ago. So realistically, today I would have expected a sideways, called a doji, the shape right here. It's not really doing anything. It's going up a little bit, going down a little bit, but it's really not moving. And that's what we've seen today. We went up, came back down. This is a daily chart over here on the right. This is my 2-minute chart on the left. So, and that's what I expected, which is good. I don't mind trading on market doji days because I can reasonably expect my stocks to do what I want them to do. On days like this, where we had a huge negative day, stocks, I mean, well, the markets are cumulative sum of all stocks. So if the markets are dropping, tanking, you know all the stocks are tanking. And so these days are harder because if you're going long, if you're buying a stock and the markets start tanking, you're going to lose. So from about the 2nd of September till a few days ago, the markets have been hell to trade, absolute hell, because nobody knows what they're going to do. Everybody's frightened. Anyway, so we're starting a little bit to get into some normalcy, not a lot, but more normal than we were. So I can reasonably expect on a day like this it'll probably just go sideways, and that my stocks have a reasonable probability of doing what I want them to do. Alright, so it's roughly 9 o'clock in the morning, let's say, okay? So I have two scanners here, daily gap up and daily gap down. These are just use TradingView. Membership's like $20 a month for a decent amount of features. I have the $50 a month one, so I can have a ton of charts. But my filters are last price above $5. I don't want to trade any stock that's under $5. I don't have a lot of success with them. Pre-market volume, I want it over 5,000. There's some interest pre-market. Changed my gap. How far did it gap up? At least 2% I want it to gap. That's a gap. Anything under 2% isn't really a gap. It's not going to shock anyone. To 40. Anything over 40, you're going to have people doing weird shit because they have insane profits. So you don't want to get a gap much over 40%. If the gap's only $5, 40% is a gap from $5 to $7. So it's only a $2 gap. It doesn't seem like a massive thing. But percentage-wise it is. So if you're looking at a $500 stock, this limit will generally be around 10%. But anyway, you learn all that stuff over time. So I want my average volume for this stock to trade at least 750,000 shares a day. Anything under that, and I'm going to have a very hard time being filled, especially with higher risks. You're trying to purchase 10,000 shares and it only trades 20,000 a day. Well, now you're the person moving the markets. You're selling and buying to yourself. So there's just no reason. So 750,000 is my lower limit. There's no upper limit. That's just the sign for infinity on TradingView. So, and I wanted making a new monthly high of the previous month. This is a big one, and I can kind of show you why here. We'll discuss what happens. Let's take a trade. What did I trade? I traded CityView today, and this is we will discuss this one in depth. So let's look at CityView. This stock has been ranging pretty closely for the last 5 months, 4 months, just sideways. You have a ton of people in here buying, a ton of people in here selling. On these negative days, you get a ton of people shorting. And then one day it goes from $19 and it opens at $24, $23.96. That's a 25% gap? 20%, whatever it is. I mean, that's huge. People are waking up that have shorted this stock on those negative days. They've lost 25% of their investment. 20%, whatever it is, overnight. They're hurting. So they have to buy their positions to close them. You can also see it gapped over these other pivots. Alright, and I'm still underneath this pivot. I have room to go to get there. I do have the 200 period moving average to worry about, and I made sure my target wasn't that far over it. But you can see, look at this volume, this green bar right here. That's how many people. It's only 1 in the afternoon. That's massive volume. I mean, it more people traded today, more stocks than in the last year. This day, a lot of sellers. I mean, let's go back. More people have traded in the last 4 hours than any other day in the last 5 years, aside from this one day. That's the shock value. Alright, that's people shorting that all have to close because they've all lost so much money. That's people opening in the day and going, holy crap, I just gained 20% overnight. I gotta sell. You get this shock value, and people get massive amounts of emotion, fear, greed. It just runs wild. And so you'll have these movements, and that's what I'm catching. That's why I have these filters. So anyway, so I find stocks that I can reasonably assume are going to move in a certain direction. I might only be right 50 or 60% of the time. That's all I need. So let's go back into my actual trade. So okay, 9 o'clock in the morning. This right here, over here, is my watch list. I went through all the stocks. I went through them. I found the ones like Citi and Flex. I mean, look at that gap. Look at that gap. Beautiful gap. Right over the previous massive pivots. I mean, this is an all-time high from before the market recession in February. This is that high from the market recession. Huge, huge gap up. That's massive shock value. You may only get 6 stocks a day that do it out of what, 8,000 US stocks. That's all you need. And you may only find 1 or 2 that give you a trade. But you only need 4R a week to make 100 grand a year, 200 grand a year. That's all you need. So you only need a few trades a day. That's it. You don't need 50 trades a day. I had 2 trades today. Made 1R. So let's go back over here into Citi and we'll evaluate my trade. I do this on my own every single day, and I save a picture of them so I can go back and look through them. But we're going to evaluate this one, and I'm not going to take time to give you exact numbers. I'm just going to draw my lines really quickly here so that we can talk. but I take a picture every day. And target 2R. This was my trade today. Barely hit target. So the stock opened in the morning. This yellow area is pre-market. I don't trade the first 5 minutes or so. I let it do its thing, let it form something. But about 60% of the time, if it breaks the high of pre-market and it breaks the high of the first 5 minutes, I have a reasonable expectation that it will hit my 2R target. And there's a lot of other conditions that need to be met. Okay, that's not. I have about 14 rules. But anyway, so I entered right here. You can see for about an hour here, I was at a loss. I was sitting right here. You know, it's frightening. You're sitting here. You're negative. Whatever. If your risk is $500, you're negative $480 right here. Thinking, well, why don't I just sell now and save $20? But you have a system for a reason. You hit this target 60% of the time. If you sell here, you're not going to hit your target 60% of the time. So you enter, stop loss, target per your statistics. If I haven't stopped out yet, there's still a chance I can hit target, always. So what happened was people woke up in the morning and you had some people start to sell for profits. Remember that gap. You had a lot more people seeing that 20% gap thinking, holy crap, I'm jumping on the bandwagon. They start buying. It gets up here to previous highs and people think, oh, it's not going to keep going. And so they sell again. But you can see it comes back down here. Buyers start coming in again. It's around a support level, a general line from pre-market, from the open. You just have buyers start coming in because they all want to get in. The stock is freaking huge right now. So yes, for about an hour. I mean, this is typical too. It'll come down close to my stop. My stop is here for a reason. It's not up here. It's per my numbers. It's about 60-70% of the initial move. Alright, I mean, that's just per my numbers. Your numbers will be different. It takes hundreds of trades to find your numbers, okay? But generally, if it comes down and it stops me out, it won't go hit target. I mean, most of the time when it goes this far, it doesn't go hit target, so that's where my stop is. So it came down, and obviously I'm sitting here thinking, oh my gosh, I'm going to stop out of this one too. I stopped out of one other today. And look what happened. It took off. This stock went all the way up, hit my target, and then came back down. My target is an automatic exit because this will happen a lot. You want to get your profits in, lock them in before it drops again. So I'm not sitting here gambling, is it going to go up, is it going to go down? If it goes down, I'm out. If it goes up, I'm out. Either way. So if I'm right 50% of the time, that's it. That's all you have to do. This distance right here, I would have lost $500. This distance right here, I would have gained 1,000. 50% of the time, I'll lose 500. 50% of the time, I gain 1,000. That's all there is to it. That's it. I took 2 trades today. One stopped me out, lost $500. One hit target, this one, and I gained 1,000. I was right 50% of the time. I lost 500 on one, I gained 1,000 on the other. Gained $500. You only have to do that once a day. 2 trades, 2-3 trades a day. That's it. Anyway, so I also have what I designed. I don't think it's open, is it? Let me open it here and we'll go through some things. Come on, I got so much shit open. I wrote this calculator. It's a program I wrote. So let's say it's 9 in the morning. I got my gap list together. I got it into Thinkorswim. This pop-up happens every time I open, so that I have to verify before the day all of my rules. These are things that make me lose money. I have to go through, read them, verify them, check that I've verified them, and then continue. If I don't, I can't press the continue button. If I try to X out of it, wait a minute. I should probably take that timer down a bit. It comes back up. I really can't do much until I have read through all of these accepted them in my mind, and continue. Now it lets me go on. So there's a lot of settings in here. I'm not going to talk about a lot of them. I will talk about this a bit. So I get my watch list in, and let's delete this so I can show you. So this data right here, from here to the right, pretend it's not there. So it's 9:15 in the morning. Okay, this is all you see right here. So what I do is I take my entry, ticker CIT, my ATR, my average true range, what it averages, its movement every day is $1.30. And my price for entry, I want to enter above the pre-market. So the high on this guy is, where's my data box? 23.95. So I want to go a little bit let's go 24. That's a round number. You want to go a little bit above because sometimes that's resistance. 24.02. And I do this for all this, but I'm just going to show you on the one. So it gives me all this data. What I do is I redesign the Fibonacci retracement tool to draw specific lines, so I don't have to draw all these lines in the morning, and these help me trade. So all I do is I set the price 24.02, my 1 ATR 22.72, and it moves these lines. This blue line is my entry, my 24.02. This red line down here is my -1 ATR for its average daily movement. So when I go into trade, when this stock opens, I am looking for it to go down about 30%, 30 to 50% of its usual daily range. This yellow line right here is 50%. The dotted lines are 30%. I use them for stops, and I'll show you how in a minute. So this stock opened, and it went down a little bit, almost 1/2 its daily movement. Then it went up. When it went up, let's see if we can get in here a little bit more. This is called an open range breakout. It's been ranging for the entire morning for its open. Alright, it broke out of that range. That's what I'm looking for. So I'm looking for initially for a drawback against the daily gap, against this gap. So going down, if I was shorting it and it had gap down, I'd want it to go up. That right there. First two bars, I want them negative, and I want them not to go much below 1/2 its usual daily movement. If it goes too far below, it's not coming back. So this is usually my limit. And so when I enter my order, I try to get my stop somewhere around that 30% ATR line, and I try to look for either underneath a consolidation where it came back. You see that right underneath there. I'm trying to get a little bit below there, maybe a little bit below this bar, just under something that might provide a little bit of support where buyers might come in. So in the morning, it came back up to that green bar right there. When that green bar formed, I had my 30% ATR line and my opening range. So what I do is I go into my calculator, CIT, entry price, I want it right above this for the actual breakout. So the high here is 24.28, so we'll go 24.32. Actually, my entry's right in here. But anyway, and my stop is the red line right underneath this bar right here, where I might find some support. And you'll see I did find support there. This came back right down to the low of this bar, and then it took off. So my stops, let's put it at 23.64. Alright, and then I can either hit log, and it'll log the trade down here so I can bring it back up later. I can share it. If I hit the share button, I'll show you really quickly here. My phone is ringing. I apologize. So if I hit the share button, I can actually share my order. Again, I programmed all of this. So, but anyway, so I could share my order on Facebook or whatever it is. But this right here is the actual order. So what I can do is, instead of hitting the share button, just hit my order. again, it logged my trade. It copies my order to the clipboard. Then I can go into TOS, my trading software, and I can actually just paste. This is my order with everything I already discussed. My entry, my stop, my targets, 2 times my risk. Confirm and send. Send, and it would send that order. I'm not going to now because I don't want to actually take that trade. So, but that's how I did it this morning. You know, at 9:34, I have a setting here. See this right here, time 9:34. If it's 1:22 in the afternoon. Let's put this at 1:25 in the afternoon. I'll show you what this does. If I try to enter an order before this time, no trades before 1:25. They have less than a 20% success rate. So the reason I do this is because my statistics show if I take trades before 9:34 in the morning, they have less than a 20% success rate. I don't want to do it anymore. So my calculator now prevents me from being able to take trades before 9:34 in the afternoon. I'm sorry, in the morning. The more you can automate, the better off you'll be. So again, I took the trade, it went for me, 50% win rate today. One other thing I'll go through really quickly is I can pull it up here, my log sheet. So every day I log my trades into my trade log. I log a ton of different statistics. This is what I want to talk about. Come on, let's get to the end. It's taking time to load. Alright. So when we look at this trade, I log what type of gap was it. I split them into different types. The city was a level 2 gap today. It's not logged yet. But where am I getting the trade from? My watch list? What time frame am I trading? What pattern am I trading? What is my risk? What date, time of entry, date, time of exit? How many did I buy? Where was my stop? Where was my exit? Comments. Did it actually follow my plan? And then what was the actual high and low of the day after that? How high could it have gone without stopping me out? Maybe I could have hit 6R, 8R. I don't know until I record them, so I have to record those. They'll be automated shortly. And then I have my user-defined columns. I programmed these in. Was it during a market correction? The last month and a half, 2 months has been a market correction. Other characteristics of my trade. These are things that I track that make a difference in my numbers. And then I can go to my trading report and I can look. And I'll show you here. If I take trades where the price is under $5, I only have 25% batting average. I don't want to do it anymore. If I take trades before 9:34, these are the trades that only followed my plan. So I've taken a lot of trades that don't. So let's go over here. On my trades, all of my trades, if I take them before 9:35, I only have a 17.8% batting average. Don't want to do it. So I don't take trades before 9:35 anymore. You can see Wednesdays are my worst day. But anyway, this is what you do. You go through all your numbers and you figure out, you put together a plan based on what pattern works the best, what gap type works the best. I don't trade level 3s anymore because I only have a 36% batting average. If it's gapping into support or resistance, moving averages or previous pivots, I only have less than 17%. I don't take those anymore. But I learned that through tracking them over time. Did I follow my plan? If I followed my plan, I have a 57%. If I didn't, I have a 21%. Should I take trades that don't follow my plan anymore? Hell no. And then my user defined. These are all the rest of the columns that I programmed in. I can look at everything. Was it an add-on trade to my original trade? Did I re-enter the trade? So that eventually, well, right now I have a 100% batting average when I re-enter trades, but I only took 3. You need a great big sample size before your numbers really mean anything. But it'll tell me, is it worth it? Is it profitable to re-enter my trades if they stop me out? If they go back up and form the pattern again. Anyway, so this is how you become profitable. It's not the news. It's not who tweeted what, or what the president's doing, or is Apple releasing a new iPhone. None of that matters. Just find what makes it profitable. 75% batting average. 56% batting average means I'm right 56% of the time at gaining 2 times what I lose. No matter, it doesn't matter what happens. I'm profitable. I just keep doing that. But how do you know you're going to make money when Apple releases an iPhone? Apple released an iPhone the other day and the stock went down. It's guessing. It's gambling. But if you went back the last 10 times Apple released an iPhone and the price went up and you saw that it went up 70% of the time, then you'd know it would be profitable and you can take it. But when you enter trades on the news or anything else like that, when do you know when to exit? How do you know if it's not working? How do you know how much it'll work? You know, I mean, look at this. What if it does this? What if you bought Apple on news that an iPhone was being released, and a ton of people bought then too, so it drove prices up, but then it started to come back down? How far up will it go? When do you know when to sell? How far down are you willing to accept the risk? These are all things you need. You can be right 10 times in a row, but if you're wrong once and you lose 10 times what you gained, you're still not profitable. So you cannot trade on the news, you cannot trade on tweets or what the president or the Fed is doing, none of that bullcrap. Only your numbers. Alright, I think I've said enough. I've showed you how I trade. Someday I'll do a live video of trading and how I trade in the morning, so you can kind of see, but that'll be 3 or 4 hours long. I don't want to do that yet because I do walk away from the computer a lot when trading. You try to control emotions. If it's coming down, about to stop me out, I need to walk away before I do something I'm going to regret. And so I'm not there yet where I'm able to record a decent video yet, unless you want to hear me cursing at the screen. So have a good one.